Oil prices jumped by over 2% early on Monday, with WTI approaching $85 a barrel, and Brent was close to $90 a barrel amid escalating U.S. Iran hostilities in the Middle East, fueling supply concerns. However, we have seen this reverse after Iranian comments sparked hopes of negotiations. So last week, we saw oil prices jump 15%, marking the largest weekly climb since early March, when the conflict in the Middle East actually began. Over the weekend, the US conducted a ninth night of attacks against Iran, and concerns are growing over supply through the Strait of Hormuz. Traffic actually just dropped to 4 vessels transiting the strait on Sunday. However, we have seen a change in circumstances. Iranian Foreign Ministry have said today that negotiations with the US could be pursued in the interest of international cooperation, and that has raised optimism of a diplomatic route coming back into focus, and that's pulled oil prices lower. But I think what these developments actually show us is these movements are very sensitive once again to news flow from the US and Iran, and sort of Middle Eastern developments, and that's very much moving oil prices once again. Obviously, any signs of easing tensions, possibility of a return to a ceasefire, together with more tankers transiting the Strait of Hormuz, will help to lower oil prices. Now, technically, we saw that oil price of WTI break down from the symmetrical triangle pattern, falling to a 4-month low of $67 a barrel before rebounding above the 50 and 200 EMAs. Now, this combined with the RSA above 50 is keeping buyers hopeful and the near-term outlook constructive. So buyers are actually testing right now the falling trendline resistance around they were testing earlier today, the falling trendline resistance around $84.50. Now, a break above that level would expose $88, the 50% Fibonacci retracement of the $55 low, 120 high, and above here, attention turns to $95. But on the downside, as I said, we've seen a slight rejection of that trend line resistance. Now, initial support is seen at $80, and that's followed by the confluence of the 50 EMA and the 61.8% Fibonacci retracement level. We've got the 200 SMA around $78. Break below this zone sees sellers gaining traction potentially towards that sort of $67 to $70 support area. For more videos like this, please do like and subscribe.